What's up, guys? Welcome back to another weekly preparation video for the week of May 2nd, 2022. Hopefully you are ready for this week because last week was bunker, but I don't think this week is any less though, because we do have the Fed rate decision on Wednesday. Okay, so that's a believe is going to be the main event. And then we do also have the ISM PMI, the non-ISM manufacturer PMI on Wednesday, and then also the non-farm payroll. So these data usually are not as important. But the thing is, I believe right now at this point, because the Fed is no longer accommodate, so these number here, if they are bad, it will be bad for the market. And also, we do have a negative GDP, negative 1.4 last week. So that is also something to consider. So at this point, these data are somewhat important to the market at this point. And then also, on the other hand, we also have a lot of earning though. A lot of them are in the discretionary, consumer discretionary sector. So we're going to see the health of the consumer here, and then how the opening trade is going to play out, right? We have the Six Flag, we have Expedia, we have MGM, a bunch of like hotel here, and like a lot of fast food restaurant. Sorry for the background noise. I mean, I live in the I live in the hood, so and this is in the morning. So right now, just trying to get this done. But so basically, I'm gonna go over some of these stock in the chart, not all of them, but if there is a possible play, I'm gonna tell you, okay? And then also the next one, the uncertainty right now at this point. So next week is definitely the Fed. Whether or not we're going to get a surprise from the Fed, that's the big question, right? Whether or not, I believe at this point, if the Fed decide to go at 0.25%, I think that's bad, because the Fed has been like, hammering down at zero point 0.5. So if they do 0.25, I think the market could go down too, because that says something about the economy, right? So if the Fed does go 0.75, which is at this point is unexpected, that could also sink the market. Okay, so at this point right now, if the Fed does go with 0.5, which I think right now at this point is kind of like baked into the move right now for the market. Okay, so and depends. So is Jerome Powell? I think he's gonna wiggle himself out of this, and then the balance sheet depend how if he want to touch on this. That's another question. But I think at this point right now, I think we possibly have a bounce after the Fed rate hike. Okay, it's like buying the rumor, sell the news, kind of like situation at this point. And then that also basically, I guess, the bull market right now is that if the Fed do decide to do the zero point 0.5 rate hike, that's gonna be like the nail to the coffin at this point. And then the second thing right now is Putin. I hope he's not doing anything drastic at this point, because right now all he does is jawboning right now. Threaten nuclear war and shit. But hopefully that all he's gonna be doing, and everything's hopefully gonna peter out, because at this point right now the sensitivity of the war is not as much when the war first began. So that's as right now. Hopefully it stay the way it is. The third thing right now is China. We don't know what the hell is going on in China right now. Is COVID is actually a problem, or is it just because China want to just like because China, the culture wise, they want to keep their face, right? When the leader come out and say this, they're not always wrong. Like COVID policy, right? Zero COVID policy. So when they mandate that, they have to double down. So at this point, I'm not sure what's going on. They're doing that because COVID is bad, or they're just saving faces right now, or some other stuff, or they masking, the economy, which is possibly bad right now, and they're doing this to just mask that. Okay, so that's another thing. And then we also have this crazy thing that China is doing the stress test, which I don't think so, because they divide the yuan and everything is crazy. So at this point, I think the main concern about China is that it's disturbing the supply chain, because right now all the port is locked down. A lot of ship or outside the port is not getting unload. So by I think the couple quarter from now, by maybe September, we might have a supply chain issue, and that gonna ramp up inflation again. So that's something possibly to look for. Okay. And number four, we do have inflation. I mean, at this point, is it peaking, already. The CPI might be peaking, possibly. If we do, but we're going to find out that the following weeks, right? And I think that also a big number to play too. So that's a big question mark on the hand here, because if that does go down, I think the market might go up, might start to move back up here. So that's something to watch out for with the inflation. But the thing is, the CPI might not go up anymore, but the prices, I don't think they're going to go down. At this point right now, the prices are actually continue rising. I went to the supermarket like a couple days ago, and the price is actually jumping. Surprisingly, though, that's another thing. So right now at this point, that's gonna interfere. The longer that happen, it's gonna change the consumer behavior, right? And that's gonna be cutting back on spending, especially discretionary spending. And then also with inflation, especially with the the pay inflation? There's a word for it, but I don't remember at this point. But that's going to increase expense for the company, and then eventually, I'm not sure how much it could pass that through to the customer, and that's going to be the problem down the road, couple quarter from now, right? So right now, I mean, the recession sign is a possible in a couple quarter, I think. Okay, I'm not sure, but the bull market right now, based on all this thing, there is a lot of headwind for it. Okay, so the next one, I mean, demand destruction. At this point, I see that because I actually experienced that myself, right? I went out and they charge extra fee on stuff, stupid. I want to go out this weekend to see how the nightlife is. That's why I try to do this video in the morning. Okay, so I could go out tonight. We'll see if that's possible, because my car does have some problem right now. All right, and so right now what I see is that I live in the hood. And by 7 o'clock, usually this kind of weather is nicer now in the spring, right? People drive around and make noises after 7 or 8. But I haven't seen that. Like, the street is kind of empty. So that one thing to say is it's a sign to me that, this inflation is hitting, especially poor people. Like the poor people get hit first, and then the middle class, and then I get the rich not gonna feel anything, I guess, at this point. But right now, I think the poor people is already been hit on this. So right now, the only people who are still spending right now is the middle class people, and that as eventually a couple quarter from now, I think if the inflation, the prices is not going down, that gonna go. They're gonna start to cut back too. Okay, and then the disposable income at this point, is. It's the lowest. After inflation, it's the lowest in 1992. So that's something to see. If there's no disposable income, there's no spending, and there's no spending, company not going to be able to make money, right? And we're going to go into a recession. And 6, I believe, is currency. There's some problem with the Japanese yen, and the Chinese yuan. For some reason, they are tanking. So I'm not sure. I don't know much about currency. That's something to look for, but that's something I want to make you aware. 7, COVID. At this point, I mean, I don't know how bad it is. Is China is an isolated issue or not? But if they keep that, if it is bad in its own, and then it's stay the way it is, it might mutate. But that, I guess, down to the end of the year when the cold weather coming back. So that's something to not to look forward. Well, you don't want to look forward to it, but something to watch for, just in case. Okay, and then number 8, earning. So last week we got all these earnings, right? Netflix, Google, Amazon, Apple. Amazon did bad. Google was okay, but it wasn't good either. Apple actually good, surprisingly. So Apple is discretionary spending, right? But people are willing to spend a lot of money. The only problem they have is that the guy down because of the supply chain issue, $8 billion or something. So right now, if based on that, I think consumer is still good. Like I say, middle class people are still decent right now. They are the one that holding up the economy at this point. And then hood tank, and then that the indication that the FOMO is over, because at this point right now, like, the buying in the market isn't there anymore. That's why we see this tanking, and then everything is selling off too. It's not just only one sector. Before it was like choosy, but now they're selling everything off, right? And then number 9, the GDP. We did talk about it. It did went negative for some reason. I'm not sure why, but if we have another quarter of negative GDP, that technically we are in the recession, right? So that is something to watch for. All right, and then so basically next week, I guess the main thing is the Fed. So that will be the thing that move the market. Anyway, so let's go to the chart, okay? So SPY right here at this point, we move. I was hoping we make a lower low on Friday, but we didn't. It's actually it's pretty bad in some way. So right now, I mean, we need to make a lower low to confirm that we are in the downtrend at this point. I mean, we are in the downtrend right now, but a lower low would like signify that, right? So at this point, that and then the question is how low will it go, right? I did a Fibonacci extension, like how much it can go down more if you do like I believe one of the Fibonacci extension is 1.27 and the other one is 1.68, and I plug in the number, right? So if we do like a 1.27, I believe it could go down to 415. No, what the heck did I do? Give me a second here. 460. This number is 415. So we could possibly go down to 402. Okay, so 402 right here is around right this point, and it's kind of like like you cannot just use the number itself, right? So right here there is somewhat of a support right here. So I guess if we do go down, that's possibly around 400. That's where we're gonna probably bounce, and then we also have this downtrend line here, which also act as support. So we have multiple things right here, right? A downtrend line support, and then we have a dynamic, somewhat of a dynamic support right here at this level, 400 also. And then if you do the Fibonacci extension to the downside, it's come out to 402. So that's possibly where we're gonna go. And that possibly that I think the low for next week, because we do like this is somewhat extended to the downside, right? We have a small brief consolidation here, and then we move down. So at this point right now, and then the volume at this point is not that high. So I want to see this break here with a lot of volume. The minute that break with a lot of volume, that's mean signify the downside at this point. So I'm waiting for that. Okay, so the SPY, and you look at the weekly, right? The weekly is below the 20-day moving average, the dotted white line. Okay, so it's already in the down, and the weekly chart is in some way of a downtrend. We're just waiting. Now, if this make a lower low, that's definitely a downtrend, right? And on the monthly chart, I mean, we close right below the 20-day moving average. So at this point right now, if we just look at the monthly chart, there is no support, right? If we do break down, 340 is going to be the main, well, that's where the pandemic started. So we might give everything up, depend how the economy is doing the next couple quarter. So that's something to look forward to, okay? So that's the SPY. And let me see here, the next one is the NASDAQ. The NASDAQ already make a low here, so I signify that. Very similar, setup here. I didn't, I think I did do the Netflix too, the NASDAQ also. The Fibonacci extension is the 302. So 302 somewhat, have some support here, and then the downtrend line also. So like 302 would be somewhere around here. So yeah, so if we do go down, that's where, if you want to play the bounce, I think that is the level where you possibly could play the bounce, because I believe right now we might sell off on Monday and Tuesday, and then on Wednesday when they announce that, we might have a relief rally. So that's where it is. That's what I'm expecting, and then that is something you possibly could play, just so you know. And then when the pullback, they might test this, weekly here. You might just test, because when we break this, this support right here is become resistant, right, and bound back to test that. So we'll see. Like I say, it's similar setup to the SPY. Hopefully the volume, just we need a lot of volume to. Well, I did break here. This volume is not it's somewhat elevating, but it's not a lot. So that's one thing. Okay. All right. So that's the QQQ. Okay. So on the weekly chart, this already confirmed the downside, right? And the monthly chart, I mean, it's at this point. Oh, it's break. I didn't see that. It actually broke the 20-day moving average already. So yeah, so the Nasdaq is a leading indicator also, right now. The Dow Jones, however, though, is quite strong here. It hasn't made the any like it hasn't reached this level, this low level yet, and then this. So we'll see how it is. So that's why I say possibly we might have a rally because all these index are not the same here, and the Dow is still strong. So the Dow might not make a low. We will see what happened, but you know, at this point, it looked much stronger than the SPY and the Nasdaq. Wow, I'm sorry for the music. You know, hopefully I don't get copyright for that. I live in the ghetto, just so you know. People drive around blasting music. You know, at this point. All right. Okay, so that's the Dow Jones. The IWM here, I think this is significant. Well, it's already went down similarly to the Nasdaq. Okay, and the volume is not a lot, so we're waiting for something more here. But it did confirm the downside, and then now it definitely, you know, it already broke this level, the distribution here, and then it went down. So it's already in the downtrend, and right now this the bear flag, right, the rising channel, and now it's break down. So I mean, we probably go down to this level here, like 317 on the weekly, because there is no support at all for the IWM. So that's one thing, and then plus, you know, they are most, these are like small cap stock, right? They're most sensitive to the rate hike. So that we'll see. This is the leading indicator, I guess. Yeah. So that with the IWM, the thing right here, this is a weird thing, right? The if you follow my channel, if you watch my thing, you know, like the Dow Jones, right? Transportation, it came down like a couple weeks ago. It's sharply dropped. And the thing is, it hasn't make a lower low here, and it's make a higher low, and then it's pop up, and now it's kind of strong for some reason. You know, it's similar to the Dow Jones, so it hasn't come close to down to this point yet. So this, like I say, this is a diversion. The Dow Jones and the Dow Jones Transportation, I'm not sure what's going on here. So that's something to watch. And then the volume is kind of timid in some way, right? And we look it out. So there is a support uptrend line support here, and then this is where they should make a lower low, right? So right now, like I say, this is possibly we might have a rally here, you know, a relief rally at least, based on the Dow Jones and the Dow Jones Transportation here. So right now they haven't make a lower low, so they need to break down under this level to significant something happening. Okay, but like also, like, you know, Apple spending, people still spending. So right now, like the demand destruction is not totally gone yet, but it is on the way. All right. Let me see here. TLT, the bond price. Look like it might make another lower low here, so we will see on, I guess we will find out on May 4th, right, when Jerome Powell decided to make the hike or not. So that's something to watch here. All right, and then we have Jung Bond already went down and make a new low already, so you know that's would be definitely affected the most. And then the dollar here is significant, like it's move up. I don't think it's going to pull back at this point. And I take a look at the weekly, right? This is weird. I think right before the COVID crash, the dollar spike up too, similar, right? And then we go out to monthly. We're going back to 2008. So before the 2008 crash, there is a move into dollar also. So is this a sign that we possibly going to a crash sooner or later? So right now, that's another question that I see right now. So like, you know, this 2007, 2008 crash, right? 2000 COVID, 2020 COVID, the dollar ran up, and then went down, and then that's when the market started to crash, right? So is this a signal? I'm not sure. Like some people say the signal to the crash is like oil price ram up and then it's moving down. I see this is somewhat similar to that, and then people say when Jerome Powell cut rate, after increasing the rate and then he started cutting rate, that's when the crash going to happen. So this, I guess, is also a signal. So this is something to think about. So tell me, like, if this is true, let me know in the comment section, because like I said, I don't know jack shit. Whatever I say is my own perspective. I'm learning this as I go with you guys. So if you know anything better than I do, please put it in the comment section for me, all right? All right, since the dollar is moving up, I guess it put a lot of pressure on gold, but gold hasn't. I mean, gold is still in the uptrend somewhat at this point right now. It did make a low here, but this support right here, this dynamic support, we will see if it's held, because if the dollar continue to move up and the yield continue to move up, it's not good for gold. So we'll see what happens. But gold, supposedly in the stagflation environment, they should do very well, right? Based on the data I see, okay? So right now, this is definitely on watch. Silver, on the other hand, is dead. So I didn't think it was good in the beginning anyway. So, if you follow, watch my previous weekly video, you would have seen that. All right, and then oil, the Brent right now, I think it might moving back up here at this point, and it's in this symmetrical triangle. So possibly, I think if anything, I'm not sure what the catalyst is going to move the oil up. Like, is it intensify in Russia? Russian going to do something crazy and this going to intensify that? I'm not sure what the catalyst for oil at this point for it to move up, or the oil embargo, then that might be the thing. So if the European decide to do that, let's check out the weekly. I did look at the weekly at it in some kind of resistance level right here. Okay, so this is a monthly. So we have some room here. We might, I believe, we might go all the way up. And if oil is a signal of a possible crash in the market or recession, we should see the high, at least up to 47 for the Brent, right? So I'm not sure what the price actual oil is. So at this point, if that happened, I guess that's going to be like kind of like a big signal. We have the dollar, and then we also have the oil too. All right. The VIX is, I mean, elevated. Look at the technical. They obey those trend line here, and I guess we'll see. We might right here, right? If we make this high, I think there's going to be the pullback. That's why I say, we might we might drop, continue to drop until the rate hike, and then we have the market rally. So at this point right now, we will see. But 33 is elevated for the VIX. All right, and this is the European. I mean, at this point right now is moving down as price in. So the European market going to get hit first, right? At this point. So this is a weekly, and this this where it's going to go, right? And 2020 COVID, right? It went down to $26. So if you want to play, oh my God, what is that noise? I'm sorry. 22, 32. So I mean, right now, if you play the downside, it's possible if we do have. Oh yeah, look at the volume, guys. So yeah, there's a lot to go down here. So just so you know, but maybe in a few months from now. All right, just so you know, it is in the downtrend. All right, some of the just Mayweather stock, right? Microsoft did well last week, right? And look, even though they do well, so this is the thing, right? All the company, even though they do well, they're not getting reward for it. They pop up on earning and then they just got fizzled out. So there is nowhere to hide in this market at this point. Like same thing with Tesla, they did pretty decent, and then boom, 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 everything got just smashed down. So at this point, long play is not in the game right now. If you could play short term, maybe intraday, or maybe like a couple of days, very short term at this point. But at this right now, unless we have some kind of fundamental change, but anything rip up, you sell. So that's what I see at this point. Okay. Google here, I mean, it's already dropping, and it's last week's signal, and then it's gonna go into support somewhere soon. That's why you know some of these things it's come close to support in some way, you know. So that's why we might have a bounce. All right, and this Apple, you know, it still held support. It hasn't. It's looked like the down, right? But I'm not sure. Like you know, we will whether or not it's gonna make a lower low here. That's questionable, possible, you know, but we'll see. Nvidia is already down. Like all the semiconductor, I guess, is already like you know tanking at this point. Tesla, see, it's still kind of strong. Let's hold up this level right now. We'll see where it's gonna go from here because this right now at this point is all based on Elon Musk right now with the Twitter debacle. All right, and then Amazon, man, this thing got mugged, bro. So basically where it's heading right now, I mean at this point this is the next level. If where it's gonna go is possibly 2200. Yeah, so look at this shit like that, right? Distribution here, and now we have a catalyst to move down. We have the union and all that stuff. They're not, inflation is costing them like a lot of the expense they have to pick out. So right now, I mean at this point it's whole support right here. We have a support, dynamic support. Whether or not it's going to go lower, it's a possibility right now because look at it, it's very toppy, right? Everything is toppy at this moment. So look, it's scary. You look at these charts and you're like, wow, man, since 2009 there's a long way to come up, and now you know the Fed is no longer accommodate. These charts doesn't look good. They don't look good at all. All right, so that Amazon, Facebook, I mean we did have somewhat of a rally here. I guess they're gonna, I think they're gonna fill the gap. They didn't do that well, but because the expectation was so, the sentiment was so bad that it bounced, okay, and then the oversold, right? I guess you do the extension, the Fibonacci extend to the downside. I think this is fairly accurate number here for them. That's why there's a bounce, even though the earning is not that great. All right, Netflix, I mean is dead right now, so no comment on that. But if you want to see Netflix, where possibly you could get buy-in, look at that weekly chart here, nasty, right? Broke under this. And then the support right here, the next support level, main big dynamic support is 134. And then if you do the monthly chart, right, look at that, 134, and this the long-term support trend line is right around 134. So we're gonna buy in, maybe wait to that level. I think it will go down to that level at this point. Look at the selling volume, very significant. All right, just so you know, if that's something you want to play, that possibly you can, that's something you could play if you want to. Short-term gain, but like I say, if this market continue to go down and the bear market is in full side, any up play is a short play you should play, okay? Nothing long, like just in and out, you know, just like the thief of the night. All right, so next one we have here the healthcare sector. Man, healthcare sector just drop all the way back down right now. So if let's say something, right? Last week's the same. Like we start selling off everything. Before we were kind of picky, like you know we people was hiding in the healthcare sector, utility, you know, and energy. But now the sell off is broad. Okay, so that's something to consider. Okay, so there's nowhere to hide at this point. Okay, so same thing, utility. It went up, it made this measure move, and now it went all the way back, and it broke the support right now too, right? So that's possibly become resistant. So now, as the market breaking down, everything gonna go down with it. Nowhere to hide, baby. Nowhere to hide. Energy too. We'll see. Energy is somewhat, there is a catalyst for this, possible. I mean, depend how it go, but it doesn't look that great at this point. It kind of broke the uptrend line right now at this point. So just something to look for, okay? All right, semiconductor. This one already make a lower low, and like I say, let's like I say, right now it's extended to the downside. We're gonna have a bounce somewhere with this support right here. It's kind of hold support right now, right? It bounced a bit and then it makes support. All right, so if you drag out this weekly, man, look how high we have come up, right? From the COVID low here, the COVID low, right? COVID, we significant for semiconductor. I'm not sure why it ramped up so bad. So because I guess the Fed was accommodative, and then tech sector went crazy. So right now, to be honest, this has a long way down to go. So be careful if you're in the growth stock, especially the semiconductor. This might be a problem with all that like shortage and supply chain issue. I think that might be a problem. And then people not having money to spend now too. That's this thing might go down huge here. There is a lot of meat on the bone for this. Just to be aware of, okay, if you want to short something. All right, let's go to some of the chart here for the earning possible play. Okay, on semiconductor, look at this setup right now. It looked like, I mean, if anything, I'll play to the downside. I think it's waiting for the catalyst here. It moved down to here, right? And it just consolidate. So if the earning is bad, watch out below, okay? But I think if it's good, it might go up to here and then going to consolidate. It's not going to move much for good. So anything right now, like I say, like especially Microsoft, you see that Tesla, they do good. They don't get reward for it, okay? So downside is the play right now, okay? So just something to think about. And plus, these are not a financial advice. I don't know what I'm doing. Please take my advice with a grain, or take my perspective with a grain of salt. Okay, so don't go crazy if you lose money on what I say. Okay, don't sue me, please. All right, so that's on Six Flags right now. Six Flags right now is just a sideways consolidation, as you could see. So I would not play this at this point until after earning, because I mean there's potential upside here, but how much upside, to be honest, at this point, because Disney is like dying, and Six Flags right now is holding up, but it's not in any trend right now. So be careful. So don't play this after earning. But if you do play it, it might go up to here if it have a good earning. And then bad earning, it might go down to here and possibly break this, okay? So the downside is always worse than the upside at this point, just so you know. Next one, we have Park Hotel and Resort. This one looks somewhat bullish. It's not as strong as some of the hotels chart, but this one does have the upside here. I mean, if we do go up, I mean, this depends how much they're going to reward you for it. But right now, the setup is if the earnings come out good, there's some movement to go in. I don't know much about this stock, to be honest, so I don't know how much movement it will be. But the upside here, possibly, we do have some room to go here. So if you want to play upside on this stock, it's a possibility. All right. Energy stock, oil stock and stuff right now. I mean the estimate that they put out last quarter, I guess I forgot what's the word for it for some reason, but like estimation for the quarter earning is somewhat too high sometimes, and then the move up or is already priced in, so the earning might come out bad. So with all the energy play, I would just stay out of it and don't touch it at all. All right. Call here. This is a rental, right? Avid purchase. Is it last year? They have this short squeeze after the earning. I'm not sure what happened here, but right now it has a lot of meat on the bone. I'm looking to short all discretionary spending stock at this point. I'm trying to look for whatever. This is like fit my my catalyst right now. So I'm hoping they do well, so it could move up and then has room for me to short this. Okay, so that's what my intention. So whatever you want to do, that's your choice. Okay, but like I say, this has a lot of room for you to play here, just so you know at this point. All right, Expedia. I mean, and make an all-time high here, just like last month. So, and then it's in this like rising wage at this point right now. So sooner or later it will go down. But hopefully they do well in this market, move back to new high, so I could short it. In this range. So if it moves to here, I would definitely short the suck out of this shit. All right. So at this point, that's what I plan to do. If you want to play short term, I mean, it's something you could, but I'm not sure how much reward you get from it, because there is a downtrend line here. So we do have a resistance level, and then another resistance is the uptrend line here. So be careful out there. So just at this point, I mean, the reopen trade is bullish, but the market is not. I'm not sure how much they want reward for it. So maybe just wait after earning. Okay. We have MGM. It looked like it's in a uptrend right now, but the thing is, it looked like it's a sideways consolidation, right? If you take a bigger picture, it's a sideways consolidation. It's in this temporary uptrend. So at this point, I mean, I would just watch out for it. I would see how the earning will play, but eventually, all these stock I think is shortable. Okay, so it's sideways range. So just to gauge this all this stuff, or to gauge for how spending is, and then you make the a little bit longer term bet for out. Let me see ANET here. Ooh, ANET. I'm not sure what they do, to be honest. Equipment communication, but the way the setup right here is the lower high, and is in this channel right now. It's about to break. So downtrend line, something to bet here. They do move big a lot. The earning depends. Sometimes they move big, sometimes they're not. So at this point right now, if they guide down, you see some of the stock, it make a huge play. So if something, I would maybe do something out, like if you want to bet, make a small bet, do something far out right here. Yeah, so this is the long-term uptrend line right here, 95. Maybe, you could buy some option out, maybe 105, 100, and see if it's do right now. See the way it's set up, it's moved back down here, broke the uptrend line, and consolidate sideways, just put in a flag. So if the earnings come out bad, it might ramp up down here. So ANET is possible to play to the downside, guys, because if it is on the upside, it's not much reward anyway, right? All right, and then next we have, let me see here, Mosaic. These are fertilizer play. At this point, like I say, the expectation for these stock, I think, is high. So sentiment is very bullish, but if they under deliver, that might be a problem. Right now, this setup right now, right, look like it's bear flag right here and then move down here, or it could move back up, depend. But I'm not at this point. We will see, but don't play this, okay? Don't play this at all. just watch and then see what their guiding is going to be, and then we could play the wheat stock, corn, or whatever you want to play for commodity. The same thing, nutrient, fertilizer play also, same thing, same setup, right? All right, then we have Hilton here. Hilton is like, man, they just make an all-time high. That's crazy, right? How the hell does make all-time high, to be honest, when everything is crazy like that. So at this point right now, like I say, I would wait and see where it's moved, but I would the reward for this, I don't think is much at this point, because in this range right now, it's in the upper channel. If it's break, so I'm hoping it's go up to above the the channel, and then I want to short it. Same way with all this thing. Okay, so this is something to watch, and if you want to set up long-term play, you could set up it out for a couple quarter out. Put in the calendar port. All right. If you don't know what calendar port is, maybe I'll do a video on it. Let me know if you want to know. Put in the comment section. All right. So that's the Hilton, and then we have, let's see, right here. This is I guess McDonald's. No, this is Burger King. I guess Burger King, Popeye, and stuff. For some reason, it make a higher high here. It went down. It broke the uptrend line. So at this point, it could go both way. But at this point right now, and I like the higher high, but the volume isn't there that much. So and then it's break down kind of sharply here too. So it could continue to go down at this point, but depend on the guidance. This should be okay at this point with these takeout, this fast food right here. I don't know, things are expensive right now. A meal at Burger King is around $9. It was around $6, right? So like a 50% increase. So I don't know, people are having money to spend this, because poor people right now, they are the one that got squashed, right? The hurt the most right now. The lower class. The middle class still have spending. So whether or not the middle class are spending this, that we will see. All right. Estée Lauder. This, surprisingly, when I saw this chart, I was like, why did it so off so badly? I'm not sure how Ulta is doing. You know what? Let's check that shit out. Ulta is all-time high. Holy crap. And why is Estée Lauder down like that? So that's also a diversion. Is maybe they have overseas. Okay, you know what? Maybe there is a lot more overseas exposure. Okay, that makes sense. Okay, so basically right now it's already in the downtrend. I'm not, it hold this little bit support here. It might could go lower at this point if the earnings come out bad. I think they have a lot of overseas compared to Ulta. Ulta is more like maybe United States inside national brand. This is an international brand. I see. Okay, that makes a lot of sense. I see. All right, so right here, I mean, possible play is to the downside here, guys. If you know, it's undetermined. If anything, I'll wait after the earning play. If you could set it up beforehand, good for you, you know. And then let's see, Molson Coors. Molson Coors is in an uptrend right now. I guess people are drinking again because of depression. I'm not sure. Like there are other company, beer company, they're not doing well, but this one looks good. Like as the uptrend line is moving up here, and it recently, you know, make a high, and look how bullish it was, right? And then it pulled back and only pulled back around 50% to 61%. So look like it possibly could go up. The only volume here is not that much. But the target here possibly this, because this in some way is a reopening trade, right? People are still going to go out and drink at this moment. So I guess this is something to play if you want to go upside. Is something, right? Next one we have AMD. AMD, I think with the semiconductor and stuff, is already moved down a lot. It's somewhat extended. So right now the sentiment is negative. So this might be like Facebook, you know, like it's already priced in the downtrend, the downline. So if they're earning, you know, somewhat okay, there might be a pop here, and then we kind of in some way waiting for the general market to pop too. So this in some way, you know, hold that. And then there is a minor support here. Oh yeah, you know what? It at the support level too. So right now, if anything, possible short-term play, you could. Maybe possible upside, but right here, be careful, right? Upside, the resistance level is going to be $99. So basically around $100 is going to be the resistance level. So just watch out if you do play it. So, you know, calibrated. Okay, so look, it broke the support, broke this. So right now, this support become resistant, right? That's $100, right? So right there, definitely. So upside maybe up to $100. Okay, so just watch out for that if you want to decide to play. Airbnb here, you know, the Coke, you know, is very bullish on this. I think they're gonna do well too at this point, because right now look at the way it broke this minor uptrend line. But you know, the pullback right here is like 50%. The only problem here is I don't see a lot of volume, but also selling volume is not significant either. And then we also have this downtrend line. So I don't know if we're able to break out of this and go higher, which I don't think we might be able to do. So this might be a problem too. And right now, so like I say, middle class spending, they're willing to travel, but a couple quarter from now, we'll see how bad this will be doing. I think it might have some headwind right here with it. This quarter might be good and might come up, and maybe it's a sell signal, right? Maybe we'll see, But I gonna keep a close watch on that. Starbucks, man, this thing is selling off like. It's already look how bad this chart is for Starbucks. I mean, at this point right now, it might go down to 70. Okay, right now, I mean, with the union and all that stuff, with the Starbucks and then the supply chain issue with inflation, I don't think Starbucks gonna do well right now. 70, maybe if you want to do long term for this. Maybe that's something you could get in, but buy in slowly though, because right now, like I say, if we're gonna have a recession, this not gonna look good. All right, so just something to watch for. All right, and then we have Lyft here. This is a weekly. Is at the support right now. Whether or not it's go down, I mean, this setup is somewhat bullish, but the thing is, like I said, in the ghetto right now, traffic is light. So at this point, I mean, I would just watch. Downside is somewhat baked in. Upside is not much, and then there's a lot of headwind with gas prices, and then you know they do implement a gas fee, right? There's a charge for it also, right? So I don't know how much people going out at this point. I need to go out myself to look at it and maybe do a video. So just wait and hold on to it, okay? Next we have Match. This one, I mean, I'm not sure why the so off is so bad here for Match. As people stop using dating app and start to go out again, and also it broke the long term like trend line here, like uptrend line. So this looks bad, and I guess people may be cutting back. This first thing they cut back is dating. I don't know. Yeah, it is. To be honest, yeah, it is. Imagine go out for a steak dinner at this point, easily $100 and plus, right? Steak dinner right now, minimum $50, minimum. Depend where you go, but I guess. Oh, you know what? I guess this makes sense. Yeah, Oh, you have to pay the fee to get to get your date, and then you have to take them out. Expensive. Recession. You know what? This makes sense. Damn, I didn't think about that. Yeah, you know what? Don't play this, because I mean, the downside possibly with the way the setup right here on the weekday, this is like a bear flag, and then it's go lower, possible. So at this point, I mean, if you look at it, I mean, if you want to play the downside, you can. But like the thing is, if you could set it up, then you could. And oh wow, it went below the. Oh yeah, it is. This is the pre-COVID high, right? It's already went below here. Wow. Yeah, interesting. Recession hit dating also, not just the normal thing, not just food and stuff, but also personal life. This hit. All right, so yeah, so if you want to play the downside, possible, but it's kind of risky though. Okay, so Caesar Entertainment, I mean, right now, look, it's in the downtrend right now. I'm not sure how much it's going to move up. I mean, at this point right now, possibly that right now, this quarter is still good, but the next couple quarter, this is bad. So this is something to watch here, okay? And this has come up significantly in some way too, pre-COVID 2020. Yeah, so it's coming down right here. We'll see. Still a lot of room to go down though. And let me see here. MicroStrategy. This one, I mean, how Bitcoin is going to be doing. Bitcoin, I thought it was a inflation hedge, but it wasn't. It's just like a risk asset at this point. So at this point right now, the setup, right, rising channel, which is very bearish, and it's already broke this channel. So right now, to be honest, downside, I think, has a lot of room to go down here. So that's something, if you want to play to the downside, is a possibility. Okay. This one is I think is CrewLogic, the semiconductor, and this I think it has a lot of stuff with Apple, right? With music and noise, I believe. Not sure, but if Apple is having problem, I think this might be too. So if you want to play the short side, it is in a downtrend. Okay. Weekly, whether or not it's going to break this level, that's another question. All right, so short-term uptrend line, that's already broken. The long-term uptrend line is still intact here, but downside is a possible play if you want to play that. Okay, because I guess that is a bear flag that's set on. It's not a bear flag, guys. So be careful. All right, maybe after earning, play continuation. Next we have CVS. CVS at this point is kind of put in the top here, guys. I didn't know. It broke the uptrend line. It put in the top. So right now the uptrend might be limited compared to the downside. Okay, so just so you aware. All right. And Marriott is very similar to is it Hilton? I believe. Yeah, just make an all-time high here just a couple weeks ago. Yeah, so be careful. Like I say, I'm waiting for the stock to make all-time high and I'll short it. But at this point, if you want to play it, right now the setup is undetermined right now. Short term, undetermined. It could go both way. All right, but it is in an uptrend though, just so you know. Yum Brand, this just broke and continued the downtrend here. I should just draw this in. Yeah, sideways, it will break under here. I mean, at this point, like discretionary spending, yes, there's a lot of room for the stock to move down. So it's something, if you want to short in the long term, it's a possibility for it to short, right? And this setup right here is already, you know, up channel breaking down. So if anything, I'll play this in the short side. And like I said, like it has a lot of room to move down too. And this is already in the downtrend already. So yeah, so downtrend to play. I mean, at this point, like I say, this is supposed to do good this earnings season, but you know, next couple is questionable. All right, Cedar Fair. Cedar Fair is like Six Flags. It is still in an uptrend at this point. I wanted to go up more so that I could short it. So at this point, I mean, I'll just watch and wait and watch for this. Okay, so technically it is in an uptrend, but I don't think it's going to last long. And this has a lot of meat on the bone. So this is one thing I want to short also. Wing, you know, I saw this chart. I was like shocked. But then I realized, you know what jacked up the price the most in this inflation is chicken wings, right? So that makes a lot of sense. And then it's went below the pre-COVID level right here. So at this point, I think the sell side is somewhat extended. I wouldn't play it at all. Okay, I'll just watch and see how they do. But yeah, it's not rewarding to the upside, and the downside is too extended already. So you don't know. Don't play. All right. Okay, Brinker. I'm not sure. Is it Chile? So right now, this middle class, lower class spending here is in the downtrend signal too. Look, it's kind of sideways base out a little bit here. Make a high or low here. Whether or not they're gonna break above the downtrend line, that's questionable. If the long-term downtrend line here. So I mean, at this point, if you want to play to the long side, it's a possibility, but like I said, the reward is not there. There go the support. This is going to be the resistance level, and then we have the 200-day moving average too. So at this point, just wait and play the follow through afterward. I would play on the short side if anything. And this is Uber. Uber, I mean, is in the downtrend line right now. It's in the support level at this moment. It's similar to Lyft in some way. So at this point, I mean, the demand for this, how much? Traffic is getting lighter and lighter as weeks go by, I guess. So I don't know. I mean, it's supposed to be reopen and play, right? But you know, with inflation and the price of oil, I don't know. And then the fee, this is questionable at this point. So just wait after earning. SC here. I don't know what's going on, but this is a no play. Definitely, I wouldn't touch this. Downside is quite extended, and then I guess they have unionized and they're boycotting, you know, all this stuff. There was a bear flag here, and then if you do the projection, I think this has a lot more to go. I mean, maybe $74 to be honest. I mean, if this earning come out bad, I mean, it's possible. If you want to play to the downside, you can, but just so you know, it's kind of dangerous because it's quite extended. All right, just so you know. eBay, I thought people would buy in eBay, but they haven't done well. They in the downtrend here. They kind of broke out and then reversed down. But whether or not they put in high or low or not, we will see at the earning. But at this point, I wouldn't touch this for now. And right here, they have at this support level. We will see where it go. But right now, the downtrend is still intact at this moment. All right. TripAdvisor, this looked bad for some reason compared to the Expedia and stuff. So I mean, at this point, don't touch this. You know, I don't think upside reward is good either for this stock. I'm not sure why. Sideways, I mean, you could play both sides, but I'm not sure how much this thing moved, to be honest. But it doesn't look good compared to Expedia. And then we have Booking.com, and this thing is the same setup, right? Like TripAdvisor here. So sideways, I mean, at this point, the only thing different here, this has a lot of meat on the bone here. It did make a low, it came back up. Interesting. Whether or not it's gonna make a high is questionable. I think it's gonna do some kind of split, right? I'm not sure. So, you know, if I do play this, I probably do want to play to the downside, but maybe like further out, like you go buy option, buy longer term option out, you know, to the downside, because if they do move up, I don't think it's going to move up much at this point, the way that's set up right now. Okay. Oh, booking. I think Shopify is the one going to split. Shopify look like it's dead, especially right now. If Amazon is having problem with the supply chain and they couldn't sell stuff, Shopify is going to have a problem because a lot of people use Shopify with that, right? So at this point right now is already is somewhat extended to the downside here, but the top is in, and then now is, you know, I don't know. Don't play this, to be honest, because, you know, the upside is not much. Like most of them, like right now, that's a resistance right here, you know. So upside is not much, but more to the downside. So depend what you want to do, but those are on the technical. Croc here, same thing. Yeah, I mean, whether or not it's going to go down more, because Nike is not doing well either. Well, the earning was decent, the pop, and then, but you know, this market doesn't reward nothing. So with Croc right now, I mean, who's gonna spend money on Crocs right now at this moment if they don't have money to go out and buy food, right? So think about that. This is like extra right now. So if anything, short side for me. The way it's set up is it look like it's more to the downside. Okay. And then we have next one is Datadog. Datadog right now, at this point, I would play the downside. Yeah, the way it's set up, you know, downside is going to broke the uptrend line support here. This uptrend line already broken, and now, I mean, to the downside. So if anything, I'll play the downside with Datadog. Penn, I mean, at this point, man, this is gambling stock, right? Same thing with like what is it, DraftKings, man. The chart, they don't look good. Look at that, like downtrend, it just broke the support right here, you know. So at this point right now, I mean, this is discretionary spending, right? This might just has a long way down to run here, so be careful. Okay, so downside, well, most of these stock are downside because look at the chart, it's nothing much to upside anyway. This one, I mean, I don't know whether or not people are going to come back to cruise, but right now this is a big range here. There's a range play, so at this point, there's no trend for the stock at this point. Short-term trend, I mean, right now it might look up, but that's going to be your resistance, and this is going to be some support here. So just so you know, depend how the guidance going to be, you know. But I would just wait after earning. Everything is wait after earning or short side. Okay. Wayfair, man, I don't know why this is like so bad, you know. So I mean, I wouldn't play this at all. But this look bad. Like some of these charts look like, you know, they got. I don't know what happened. Like nuclear went up and then destroyed everything. This one, I think downside is good for this one. This is like a pet stock for pet, right? This, I'm not sure this is a rumor or not. This is what I heard of people. A lot of people who adopt pet during the pandemic now realize that it's a responsibility and the commitment is over, and then they just give the pet away, especially put back to the shelter. So, you know, at this point right now, and that is a discretionary spending, right? So I don't know how much love for your pet, but in Asia, you know what they do to pet. You know what I mean? So at this point, I would go short for this one. I think I'm going to play short. This setup for right now is like, you know, down here, a lot of volume. So look at that, like the selling that break the uptrend line, a lot of volume, sideways consolidating, you know, at this support right here, with a lot of selling volume, somewhat buying here. But right now, to be honest, if the earnings come out bad, this has a decent way to go, 140 here. So I would, if anything, I'll set up for this play. I would go to the downside. Please, discretion is advised. I'm not a financial advisor, okay? Just so you know. Okay, Budweiser here, it looked different than Motion Core of some way. I'm not sure why, but I thought I took this out, but it's still in here. So downtrend line, don't play this, you know, it look weak. All right, we only have a few left. So okay, C War Entertainment, this one is in the uptrend line right now, but it's in this rising channel here, so it is somewhat bearish. But I'm waiting for it to make a high. I hope this earning come out good so that I could short it. All right, so just so you know, play as your discretionary advice. And then we have pizza. Papa John. I mean, Dahmer didn't do well, so I guess Papa John already took the cue for that, and then it was dropping. At this point, I'm not sure why Papa John would be a problem. I'm not sure how expensive. I don't eat pizza like that. You know, I'm Asian, lactose intolerant, you know. So, no, nothing much about pizza. So, at this point right now, I mean, the downside is somewhat like, I don't know how much more go for this one. But be careful. SQ. Man, look, if you look at the daily chart, right? The setup, it went up, a rising wedge here, and it's broke under the uptrend line, so bearish. I mean, this might continue to go down because I'm not sure how the revenue is, but like spending, if customer is not spending a lot, this might come to play, right? So downside for the stock possibly continue here. All right. Lucid, I mean, at this point, don't touch this shit. This might go a bit lower, you know. Cloudflare here. This setup is somewhat bearish to me. All right. So we do have a rising channel, right, in some way, and then at this point, anything on the upside, look at the upside, right? Volume, buying volume on the breakout are low. So, you know, it's not good. It doesn't look good. And then look at this setup right here. Broke the uptrend line. Right now consolidating. This possibly could go way down here, like in the long term, a few month projection out. You know, this could head down. If the earning is bad, it could head down to maybe like $45 projection, this land right here, and then go down. You saw that? Yeah, so right now, if I play this, downside. Ooh, Zillow is trash right now. I mean, at this point, an increased interest rate, housing is slowing. So, I mean, long way down to go here. So if you want to play the downside, it is an option, but you know, be careful because it has already come down a lot. Okay. DoorDash, new time low just a couple weeks ago. So at this point right now, I mean, if you already have to pay like 50% increase in food, and then you have to pay for delivery and all that stuff, I'm not sure if this is something you're gonna spend extra cash on. But I know the young people do this, so you know, we will see. But this doesn't look good, to be honest. It looked like it's gonna go down, continue going down here. And this company, I don't think they're still negative on earnings. So right now, downside for this baby, if anything. All right. Shake Shack look like it's set up. It's in the downtrend right now. Look, downtrend. Look like it's gonna make another low here. So depend how this earning is gonna go. But you know, this is discretionary earning. I mean, Shake Shack is a little bit high end. You know, not for the poor people, not for lower class people. This is middle class people. This is middle class. But whether or not they're gonna shove out like $15, $20 for a burger. $15 a burger now, I guess, at Shake Shack. I haven't been to Shake Shack for a long time. I'm poor, you know, so it's not in my option. Chinatown is my option. But so you know, at this point right now, it looked like it's gonna go down. But we will see how the earning is. But long term wise, I think this continue to move down here. Oh, you know what? This earning is weird. Like sometimes they make money and sometimes they don't. It's not very consistent. So just so you know. All right, so that's Shake Shack, downside. Redfin here is very similar to Zillow, but it's come down like nearly to the low here. I think it's gonna break because it's a smaller company and it hasn't earned any money yet. It's still losing money. So at this point, just wait. And if we do go into recession, this stock probably going below $5. I mean, it might go down to $3 or $2 if we go into a recession. So just wait. Okay, be patient. Don't play on the short side or the upside, because the short side is so extended right now. It could have a relief rally and could, you know, whack you out. But long term wise, I would keep this on watch and wait. If we do go into recession and it's go down to maybe like $5, $3, I might could, like, you know, you could do a leap after that. You could buy long term leap, call, and then maybe sell short, sell put to finance for that. You know, so that's something you could do. But right now, just watch this. Don't play on it on this. McKesson here. This is a weird thing. I saw this chart. I was like, wow, this baby is like so toppy. You know, it's moved up all the way up here, and so much meat on the bone. Even though like a lot of the healthcare sector is selling off right now. I mean, this is a drug distributor, right? And look at this, right? It's moved up. The uptrend line is intact right now. Whether or not this is the top, I don't know. But if anything, I would play on the downside for this. I'll set out a little bit longer term and play on the downside, because this, they haven't come after the stock yet for some reason. I don't know. I have to look into this. All right, but the breakout here, there isn't a lot of volume. Look at the monthly. It went up. It made this, you know, this cup here, and it's overshoot, right? Because a lot of people come into the healthcare sector for safety. All right. And I guess this is what they do right now. Look at this candle, the monthly candle here. This look bearish as hell. All right. So if anything, I'll play on the short side for this sucker, because I think it's a lot bacon. You know what? Short side for this. I'll actually, if anything, earning, I probably played earning on the short side for this one, because this might be, the upside is already priced in. So at this point, and this, look at this candle. This monthly candle is bearish. All right, so that's something I would play. Like I said, that's not a financial advice. Okay. Yep. Here, man, sideways doesn't look good in the chart. So at this point, this should look better, but it's not. So don't play it. Just watch. And then right now, it's sideways consolidating, you know, in the downtrend. So it might break and continue down. So just for to watch. All right, then we have DraftKings last but not least. This baby just very similar to Penn, and there's already make a lower low, and it's not making any money at this point. So at this point right now, I mean, I think this sucker might go lower here. Sad to say, I do have a position on this. I'm in pain, baby. But like I said, the technical, it doesn't look good. I wouldn't play this on the earning, but right now it looked like it has much more downside to go. Okay, so just so you know. So at this point right now, let's wrap this video up, guys. So be careful next week. We might have a rally in hand, even though you know, the Fed might come out bearish, raising rate, but I think the downside is somewhat baked in. So strategize, set yourself up for a quick rally. Okay, this is not a financial advice anyway. I'm thinking we're gonna have a relief rally next week. All right, so that's all, guys. Thank you for watching, and good luck trading. Okay, bye.